Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news the pandemic surge in the US is reaching frightening levels. But first, their November non-farm payrolls data disappointed. A rise of just 469,000 was expected after the October 610,000 gain, with the November expectations undermined by the weak ADP data. But the actual result undershot all of those estimates and came in at just 245,000. It is a significant loss of momentum. This means that there are 9.7 million fewer people employed in November 2020 in the US than were employed in November 2019, even though their working age population grew by 1.1 million people over the same period. New American factory orders fell 3.7% in October from the same month a year ago, and they slipped from the prior month as well. And on the trade front, their October trade deficit for both goods and services came in at $63 billion, its second largest ever and only beaten by the awful August result. Their October goods deficit was 21% higher than a year ago. Their services surplus was 24% lower. And the politically sensitive deficit with China came in at $30 billion for goods alone, and little change from the same month in 2019. And this poor data has re-energised Congress. Lawmakers on Capitol Hill are currently negotiating details of roughly $900 billion plan to support various at-risk sectors of their economy. And in Toronto, they're pushing ahead to get approval for a tax on vacant homes to increase the housing supply by encouraging homeowners to sell or rent their unoccupied homes. In Australia, they see a new ban coming from China, this one for wheat. Fortunately for them, Chinese demand is high and the Aussies sell relatively little to China, so their opportunity is in markets where wheat to China is diverted from. The Aussie rural sector is experiencing its second best ever grain crop this year and is enjoying high livestock prices. Back in the US, pandemic infection rates and deaths are spiking in a frightening way. The vaccines are a long way off from being rolled out at scale there. And the US Treasury 10-year yield will start today at 0.97% and holding over the weekend. And the price of gold is up another $3 to $1,838 an ounce. Oil prices are holding at Saturday's level, now just on $46 a barrel in the US, while the international price is just over $49 a barrel. We're getting back to levels that were around prior to the start of the pandemic. And the Kiwi dollar has firmed marginally to 70.5 US cents and off its recent highs, but at a similar level to a week ago. Against the Australian dollar, we've firmed slightly as well, back to 95 Australian cents, and against the euro, up marginally to 58.2 euro cents. That means our trade-weighted index is at 72.6 and slightly below last week's level. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.